Right, now we come to everybody's favourite, tax and VAT. What do we do about tax?
What do we do?
Yeah, the answer is we pay it. You should know, there are quite a lot of courses that you can go on. For instance, excuse me, for instance with the Chamber of Commerce, basic courses.
Yeah.
And they will put you through all the basic, what I call the basic boring bits. Tax, VAT, registrations, things you need to know about legislation, all that type of thing. You do need to do all that because at some point the taxman's going to come knocking on your door and say, hang on a minute, you're making money here. If you reach a certain level of turnover, is it about 85,000 now? I think it's about 85. They might have put us up to 90, I'm not sure. But the VAT level, once you get to the level of turnover, then you've got to pay VAT.
Okay.
That means you immediately got to charge 20% more than what you're charging.
Right.
So be very, very careful about that one. There's a couple of ways around it, legal ways. I mean, obviously, I used to go on to Steve next door about it, and I don't know whether it ever sunk in. But if you're reaching the 80,000 turnover figure, then if it would make you wildly uncompetitive to go another 20% higher on your prices, then your wife can start up in the business doing the same thing. So you can set up a separate business doing exactly the same thing, using all your methods and whatever. It has to legally be in her name, and you can take that up to 80,000.
Oh, right.
So you've got two levels there before you start paying tax. That's if you can get your wife to do it, which we couldn't with this friend of mine, but we won't go into that. So there are legal ways around that, but once you reach that limit, you must pay the VAT, the tax, the VAT. Once you get over 12,500 profits, you've got to pay tax. So make sure you record everything.
Yeah.
Everything's written down. You keep all your receipts, and if you're clever enough, fill in your own tax return.
Yeah, I do that.
You do that.
Yeah, online.
If it gets to a level where it's complex, then get yourself an accountant.
Yeah.
I don't even bother with it. I just give it all to you. I have it all on quick, and I have all the receipts and the invoices all in the year, and I just give the accountant the details on Quicken. Just a P&L, that's all you need. As long as that P&L and those figures match everything that's in the bank, they match everything that's on the invoices, then you're street legal. Whatever the tax is, pay it. Otherwise you're going to cause problems in the future, investigations, you'll be able to sleep at night, and then you'll get a bigger tax bill than you would have had. So all the basics of legislation and whatever, they can be done at local level with various chambers of commerce. There's courses you can go on and learn all that boring stuff.
Yeah, I must admit, Stu was good here in the shop.
Yeah, he is,
Yeah. Stu showed me how to register, how to do the online tax.
Yeah.
Because you can be a bit daunted. You go, oh, what's all this?
What is all this?
And, you know, once you get into it, 90% of it, I just answer no. It's not relevant.
No, exactly.
A lot of it isn't relevant. I wouldn't be daunted by doing the online tax because 90% isn't relevant. All they want to know is how much have I spent, how much have I made,
that's it.
and what's your profit. Ticket, off it goes.
And off you go.
Yeah.
So you know then that you're legal.
Yeah.
It's no good saying I don't make any money for 10 years. Because why are you doing it? So you can make up to 12,500 before you pay tax.
Yeah.
So make sure that you declare what you're doing. You've got it right. Get it in on time.
Yeah, I think I did mine in November or December. I wouldn't leave it to the last minute.
I do
because
mine
it's
in
for
May.
because it's for the previous year.
Yeah.
So you should have all that information in
exactly.
front of you. I've got my trusty book and pen, I can go back the previous year and go, that's what I spent, that's what I made, put it into the computer,
And you're
and it takes me 10-15 minutes, and I forget about it.
So if you don't understand it, then take advice. If it's getting out of control and you're doing really well, get yourself an accountant. And then long term, you know exactly where you are, you know exactly where you're working, and make sure you keep some money back to pay it.
Oh, right, okay,
That's the other thing.
right.
Most people forget that you're going to get a tax bill at some point.
Ah, right. Well, I've not got to that point yet of paying tax.
Well, once you get over 12,500, the first, I don't know, what's it? Is it 28,000? No, it's 20%
Right.
of the profit after 12,500. Then it gradually goes higher, it goes to 40% and so on. There's also, if you're in bigger business, I mean, we have a capital gains tax to pay because we sell property. So make sure that you know about capital gains tax. If you're buying and selling shares, it's capital gains tax. Get your head into what tax you've got to pay. Everything's taxable